Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. A lot of us must be baffled with what's happened in the market in the last few days, wherein mid caps have gone completely off the boil. And the bullishness, the overt bullishness in the market is now no longer a given. Sure, the indices seem to be taking support, but the broader markets are anybody's guess. About 3 or 4 months back, when the indices were at near 16,000, and a lot of calls were coming for a steep correction, Biju Samuel, Senior Vice President of Quant and Alternate Strategy at Elara Capital, had come out with a note stating that he believed that the indices are well on their way to above 19,000, arguably at levels of 19.5. The question to Biju Samuel today, as he joins us on Talking Point, is whether he stands by his call or have the structures changed, and what is it that he believes has changed, if anything, in those structures for individual themes, both on the upside and the downside. Biju, great having you. Thanks for joining in.
Yeah, thank you so much. Yeah.
So Biju, back then, what was the reason why you had thought that the indices would have a rally? Because you were amongst the few voices, or probably maybe a lone ranger of sorts, who believed that the indices could hit those levels. What prompted you to say that? And how has that changed right now, if it has?
You were talking about the last call for the 19,500?
Yes, I am.
Okay. See, one of my common axiom, which I keep narrating to people, is that in a bull market, the trend is innocent till proved guilty. In a bear market, the trend is guilty till proved innocent. So I would be extremely cautious in responding quickly to any, perceptibly bearish signs, because often these things surface and then fails to, materialize. And the sell signals often go wrong, or the topish signs often go wrong in a bull market, especially a bull market which is not at an extremely matured stage. Price-wise, we have moved vertically since the last 1.5 years. But time-wise, we are still, it's only 1.5 years into a new bull market. And it's a bull market which is started after probably the third largest capitulation in the market's history since maybe the last 2 decades. So it has a very large shelf life, multi-year shelf life. So within that context, so I would expect the bull market conditions to prevail. So I would be less sensitive to potential bearish signs, and I'll be very quick to endorse any bullish signs, actually. So right now, when I look at it, market has reached, that first layer of oversold, I would say. Oversold in terms of, this is the typical bull market oversold, where that particular threshold where, the usual dips get bought. The regular dips, not those, very large sizable corrections. My sense is that we are still in that mode of, a quick dip and quick resumption of the uptrend. I'm not into that reading for a sizable, sustainable correction, bull market correction reading here. So, for example, we track a lot of internal, indicators. Simple, some of the simple parameters right now, some of the biomarkers for a low, in an uptrend like this. Stocks above 20 DMA is, reaching, it's close to around 20% now. Like, I think somewhere nearby, when 90% of the stocks break below their 20 DMA, that's when the market has, contained the downside in this bull market. We are there. 50% of the stocks are above 50 DMA. So that means half the stocks have slipped below 50 DMA. And these are, some of the markers for a low. We've seen it repeatedly, happening, the market turning around after these developments, and we are there. We are almost there. So this is the point where we can expect a vigorous, turnaround.
Did I hear you use the term vigorous turnaround?
Yeah, because these kind of when the bull market conditions are present, the oversold is responded vigorously, and the markets sort of persist at the overbought. That's the biomarker of a dynamic uptrend. So that's why you will not get what I would say. Market will not give you too comfortable time to buy into that optimal point. It will be a very fleeting moment. That's
Got it. Biju, the most common, not the most common really, but okay, yeah, the most common way to look at whether the market is in a corrective mode or no is to look at the index. But beyond the index, I think the last 5 or 6 days, we've seen tremendous destruction. And you can argue that, yes, some of the high-flying stocks which had gone up too much have corrected the most. Be that as it may, but the headline numbers of a bunch of much sought-after companies have seen tremendous corrections. And I'm not even using an IRCTC as a benchmark. A bunch of spec chem companies, pharma companies, some of the platform companies, all of them have come off. So the broader markets are bleeding currently. Do you reckon that they will have this fleeting buying moment theory as well? Is that applicable there too?
Actually, see, what will happen is in every uptrend, there will be some excesses in certain pockets, and the next market dip will be driven by corrections or shakeouts in those places, those pockets where the excesses have happened. The last time I remember, by mid-July, it was a culmination of a little bit of small cap excess. There was indiscriminate, activity at the small cap, micro cap level, which got kind of, culminated during mid-July. And the next correction was predominantly in those stocks, small cap stocks, the post mid-July correction, July-August. Almost 20% correction happened in a large number of small cap stocks, while the market actually was very resilient, the main market. Similarly, here in this leg, the recent leg, there are certain excesses which happened in that leg, and that's where the shakeout has unfolded. What will happen is once the market turns around from here, there will be more discrimination in those pockets. Their participation will be more discriminating. You will not have a kind of a robust breadth happening in those pockets. A lot of them may languish, stall, while the leadership will shift to certain different sectors, different set of stocks. I wouldn't be surprised, the last few days, resilience and leadership in banking could be an indication of, the banking driving the next part of the uptrend, So the character changes while the bull market holds.
Well, in which case, Biju, if it is BFSI and when banking moves, it's largely the large caps which move. We do have the small caps participant, which is largely the big boys. Would you believe that this up move that you potentially see, what levels can it take us to? By what time frames, if you will? And would it be large cap dominated?
Yeah, I think ever since the small cap, kind of excess or exuberance is into July, at the while the large caps got neglected, that was the one cycle. The theme changed to under-owned large caps driving the uptrend. So I would say that tilt could remain. It could be predominantly large cap, maybe predominantly under-owned large caps, not maybe those extremely over-owned large caps. And in general, a lot of large cap stocks had completed prolonged consolidations, actually. Prolonged non-performance of 8 months, 10 months, from where, like even something like Reliance had seen I think 10, 12 months of sideways structure. And from where it has recently broken new high. So a lot of large caps had seen massive consolidation. That's why, banks, you'll see, since February, banks were not going anywhere, actually. The bank Nifty, if you look at it, was kind of, meandering. Now with this breakout, that meandering turns out to be a kind of big base and a breakout out of that. So in large caps, it's not that everything is, it's not a case of things vertically having driven and staying at the cliff types. It's all been like, consolidating and beginning to move up. Maybe that way the juice is higher there. Yeah, that is true. Yes.
Okay. A quick follow-up would be two pockets which were not over-owned, but have since then seen a rise in ownership and a tremendous uptick in market capitalization: technology and metals.
Yeah.
Do you think the rallies are done for now, or can they have more? Can they be the leaders, is the question.
Yeah, see, the technology, I've been a believer since later part of last year that this is the biggest secular story of the decade, tech. Because the first simple indication started emerging somewhere in 2020, later part. Infosys, the relative performance of Infosys with the market has broken the 2000 mania peak, after 20 years. That was late 2020. That was a message to me that this tech teji is kind of a new secular cycle after the 2000 peak. Post 2000, the mania and the bust, what we've seen is cyclical trends in technology in terms of leadership with the market. You've not seen a secular leadership of tech, since the last 22 decades. After that, Infosys has shown the first sign. And so then one by one, most of the stocks have started giving that kind of a structure. So when you say, after 2 decades, a new secular trend is launched, it is definitely something like multi-year. I wouldn't be surprised, 5-10 years kind of positive bias on the sector. And again, from a tactical perspective, what happened is tech has seen a bit of acceleration in the last leg.
Yes.
Especially when the market was a little uncertain in between, especially globally, there was a little risk off. A few months back, there was more focus towards technology. So techs have got accelerated somewhat, ownership is risen, but not to the extent of the outperformance of the sector. So I wouldn't say it's a crazy rise overall, broadly, into the tech as far as ownership is concerned. They're moderately owned, I would say above, but not crazily owned yet, in tune with the performance of those stocks. So right now, again, coming tactically, as I said, there was an acceleration. There was a very nice cycle which is played out. There is a chance that there could be a little tactical pause. While selective stocks, like for example, Techem has substantial merits and it is heavily underowned and it is a massive secular breakout recently. But some of the other stocks might take a little bit of, underperformance for a few months, and from where the entire sector will again reassert. Yeah.
Got it.
So that is about tech. And coming to metals, I'm a believer, this also, after 2006 and 2007, the base metal complex itself, as well as the stocks, they are breaking those levels. So obviously there were 1 or 2 incidences like 2017 and all. It did look promising that now finally metals are taking off, but then it was actually a fake out and value destruction happened. Things came all the way back to the bottoms. That fear is always there. A couple of times it was very deceptive in metals. But this time around, I would say this could be something sustainable and substantial. So I'm a votary for further upside possibilities on the metals and commodity complex as a whole.
Okay, so that's interesting. I would push one more pocket which hitherto was underowned or probably still might be underowned, and that is the other commodity complex, oil-related names, particularly Biju. What's your sense there? As we speak, oil is hit $86 to a barrel, 7-year highs, US crude, and the likes of JP Morgan and some of the others are fairly bullish on the oil upstream companies. What is your sense on the charts?
Overall, the one thing is about oil and all, I will not be very confident in making projections because it's a cartelized commodity. So obviously, it can extend, but I will not base a lot of my conviction on the success of an oil view. But industrial metals, commodities as a whole, after decades, this is the kind of a different uptrend. So I would expect that structure to continue. I wouldn't know whether it is, I wouldn't have that kind of secular confidence like I have on IT, but at least, it's a multi-year affair in Tata Steel and all. After 12 years, there are 12 years of a kind of triangle structure. It has come out actually, though it has got driven a lot very sharply. Because of that, it is now underperforming. But these are all like things happening after it's like decadal breakouts in many of those stocks as well as commodities. Yeah.
Okay. So technology top of the pile, so to say. Banks and metals look okay. Oil, you're not completely convinced. I have before we move to maybe a couple of mid-cap pockets, Biju, a question. Did I miss your answer on what do you think the Nifty will do? Do you think it stays on course for the 19,600 mark?
Yeah, actually, frankly speaking, I'm not somebody who will give too much sanctity to targets, but people would love to see targets.
No, forget the target. But do you think there's a 10% rally?
Yeah. So I would give very high visibility for that kind of upside. Actually, that is again, the next level, not the eventual level. 19,500 types. That. Yeah.
Okay. So circa 7 to 10% kind of a move.
Yeah.
By the way, viewers, there's a lot of difference between 7 and 10% too. I'm just trying to give you a broad range.
Yeah, actually, the Bank Nifty itself, the projections right now shows something like 12%. Maybe after yesterday's move, maybe a little 10%, 11% or something. So that is there. And another thing which I've been maintaining based on our framework in terms of time, since last year we were maintaining that the minimum shelf life of this stage is November 2021. And that's minimum. It doesn't mean that the moment November is there, the market should crash. So the thing is that minimum shelf life is still there actually globally, because I was maintaining that there is low crash risk till November this year. And globally, there are fresh buy signals at the global level actually. Yeah.
Interesting.
Yeah, in fact, one of our flagship indicator, what we call the bull market breadth indicator, it had flashed a buy signal recently at most of the global markets, including the EMs, after all the Chinese turbulence beginning to settle, whatever. So there is a globally, the only thing is India has outperformed a lot. When globally there was a little bit of confusion, there was a little brief risk off. During that time, some of the India outperformance statistics were like 28% outperformance of EMs and all. Yeah, so there could be some tapering there, in temporary, India's outperformance, while because the others are also now looking up. But India's outperformance could be structural. That possibility is there.
Sure. I get your point. Okay. Last couple of questions, Biju. One of them is on what looks overowned and therefore corrective in nature. So while the markets may do what they may do, relatively, I heard you mention that what is underowned and could outperform. I want to know what is overowned and you think could underperform.
Actually, it's a little difficult, but anyway, broadly, when you look at the past decadal market move, where the leadership expansion and ownership expansion, all these things played out in a big way is the banking and financials actually. So from a very long-term perspective, that's where it has, the best was seen last decade, especially private banks and financial services and stuff like that. Right, but over the medium term, the ownership was reduced. There was a little bit of neglect there, and that is what is, I think, going to get kind of readjusted favorably. But on a secular perspective, I'm not a votary for banking, private banks, or financial services to be great leadership candidates. They are good tactical buy here, but not structural.
But I would still wonder, sorry, just one quick follow-up there.
Yeah.
What is it that looks relatively weak in the current context until November or until December? So IT will do well, banks will do well, metals are still in a good run. What will underperform? What do you think will underperform? Large caps.
I think select IT can underperform.
Okay.
Yeah, for the next few months, it's possible. What else? Maybe some of the FMCG has already corrected a little deep. They might make a low here, but they're unlikely to show leadership. They're unlikely to show significant performance. That could stay underperforming or weaker. That's possible. Yes.
Okay. Sorry. Excuse me. Sorry for that. Okay, my camera seems to have gone off. Now it's focusing. Biju, one final question. At the broader end of the spectrum, and actually would love you to end with, if you can, that is, and if you're at liberty to talk about some stocks wherein people should keep an eye out for. We'll be classifying this not necessarily as recommendations, of course. We're not in that business here at BloombergQuint. But would love you to talk about some stocks which you think people should keep an eye out for. But before that, at the broader end of the spectrum, what about themes that have started to emerge fundamentally? There's this ethanol theme which pushed sugar higher for a brief bit, but frankly, if you look at it, the stocks really haven't done too much. Then there's real estate, wherein there has been a bit of a rally, but the commentary from some of the companies is that they might see the best ever second half in their history. Macrotech or somebody, for example. And then there's this whole set of companies which are the capex companies, which everybody says India is on a capex revival, and therefore the capital goods, etc., could do really well. Do you like any of these themes?
Yeah, see, in fact, real estate, just like metals, it was a decadal, underperformer. It was a basement dweller, actually. And once or twice it had shown promise and then failed, and value destruction happened. But now the recent breakout is showing a lot of promise, and this is actually one of the first oversold after that. The first layer of oversold, the short-term oversold after that, and so I think a positive response here is likely. If maybe one should look at some of the real estate stock which you are wanting to buy at a dip. This could be an optimal point, actually. That's about that. And in terms of another sector which could have a sizable upside again within banking is the PSU banks. That's where I think it is not tactical. It is both tactical and structural, actually, or they say it's structural. I think it's because you have seen a decadal bear market, almost, the mutual fund ownership used to be as high as 10%. It dropped to almost 2%, actually, at the lows. Now also it is very close to that. So it's a heavily underowned sector which has seen a secular bear market and which is launching a secular bull market. So there could be substantial upside in a lot of those names, actually. In fact, that's why this time around the banking move, because of the PSU structure, PSU bank structure is got a lot of merits. It's more broad-based than polarized. The banking move. If I look at the equal weight bank Nifty or something, it is showing a substantial breakout from sideways movement, actually. So that could be more because, and then within private banks, for example, ICICI has taken on massive leadership over some of the other traditional leaders. So there is like 5-year structure of outperformance with HDFC Bank broken recently, sometime back, and it is reasserted it now. So that way, ICICI is emerging as a leader within the private side.
Okay, and in the PSU side, do you reckon people will stick to the SBIs of the world, or the BOBs, PNBs, can banks can also?
I think both the SBI as well as maybe there could be more alpha on the second run. Yeah, actually, yeah.
Got it. Okay. Viewers, I would urge once again, please do your own due diligence. Biju Samuel has just spoken about a bunch of names by virtue of his study. They and their clients might get out of these stocks at any point of time, depending on when the charts or the moments change. So please don't term this as buying ideas. You need to, or selling ideas. You need to do your own due diligence before you do this.
So that's why I keep, telling, technical analysis or alternate analysis. It actually, shows some heads up. But then, the pulling the trigger you have to do with fundamental analysis if things are coming in place. Yeah.
Well, maybe people can do that. But Biju, this was lovely talking to you. Thank you so much for taking the time out. To you and everybody, festive greetings. And we'll look forward to talking more often, Biju. Maybe come the start of the new year, it'll be lovely to have a chat with you again.
Yeah, sure. Thank you so much.
Thank you. The pleasure was ours. Viewers, thanks for tuning in.
Thank you.